Okay, perfect. So let's start. Good evening, everybody. My name is Mena, and I'm your host for this class. We're going to be discussing a moment. Please mute yourself. Hello. Okay, thank you very much. Okay. Good evening, everybody. My name is Mena Ojiri. I'm a tax consultant, auditor, and accountant. I'm the founding partner of Accountant Data, and thanks to our wonderful host, I have this privilege and opportunity to talk to you about the new tax law, right, and what it means for you as a business owner from 2026. Okay. So without much further ado, I have just one goal for today's class to enable you to understand the tax law as it affects your business. So if the goal is not for you to understand the whole law that was signed. The goal is basically for you to be able to understand how does it affect you. How can you save money, right? How can you ensure you're compliant? So without much further ado, we're just going to dive straight into it. And after the plenty talk that we'll be having, we'll now have an opportunity for a Q&A session, right? So let's get right into it. Now, who is a taxman? I will have two major taxmen in Nigeria. They call the federal government and the state government. And the hem of our affairs is our honorable Tinubu, right? Our guy at the top. But yes, we have the federal government and the state government that are in charge of taxes in Nigeria. Now, what taxes are there and who is in charge of each of those taxes? So, like we've mentioned earlier, we have the federal government, right, and the state government that are in charge, although they are local government taxes, but we'll not be talking about them in this class because, to say the least, they are basically inconsistent, right? But these are the major taxes that concern us, and even the ones that the tax laws are written about, right? So we'll basically have four. Please, once you join, mute the call so that you don't distract us. Thank you very much. Now, there are four major taxes, right, which basically are handled by different parastatals. For the federal government, we have the company income tax, the value added tax, and the withholding tax. While for the state government, we have the personal income tax, the pay as you earn, and the withholding tax. Now, you say, there are 6 here, right? Well, actually, there are 5. We have withholding tax here and withholding tax here, which simply means that the federal government collects withholding tax for corporate entities, right? So for business name, limited liability companies, and the like. The government, federal government collects those withholding tax. When we go forward, you understand what withholding taxes are. And then the state government collects withholding tax for individuals, right? So basically, that is the difference. Now, I said 4 major taxes because I usually consider personal income tax and pay as you earn one and the same thing. One and the same thing because individuals pay them, they're calculated the same way. The only difference is one is paid by business owners and directors, while the other one is for salary earners who pay it monthly, right? So this one is annually, this one is monthly. That's the only difference. But the computations are basically the same thing. Okay, so what are the taxes that you've owed? Yeah, right? So just like we just mentioned above, we have the company income tax, the personal income tax, the pay as you earn, value added tax, and withholding tax. So come 2026, or slightly come 2020, in 2026 and beyond, right? If you ever have to do anything with tax, they will most likely fall within these 5 taxes that I have listed here, right? So all the noise about taxes are basically centered around it. So once you understand what all of these, who owes them, right? What are the criteria, how to file them, and all of those things, then you're pretty good, right? Like I said, my goal for this class is to enable you to understand the taxes that affect you and your business. Okay. Now, for us to do that, I'm going to dive into what I like to call the tax exposure table, right? Looking at the 5 major taxes that there are and the type of businesses or how people basically operate within Nigeria. Now, the first person here is what I like to call the individual. That's me and you as an individual. What taxes do you owe? Now, we'll have the personal income tax, obviously, because you're an individual, you pay the personal income tax. This is the tax that individuals are meant to pay. It's basically like the most common and most controversial one, where they say, once you make over 800,000 naira, some will say once 800,000 naira pass through your account. A lot of news has been going on about personal income tax. I hope that by the end of this class, we'll be able to debunk some of them, right? So yes, every individual who earns an income in Nigeria, right, gets to pay personal income tax. They don't pay company income tax. They don't pay value-added tax, which means that an individual, if somebody is doing a job for you, as an individual, not as a company, they cannot charge you value-added tax. They cannot charge you withholding tax. If then the last one, as you can see here, is pay as you earn. So there's a good and bad, simply because the pay as you earn, while it is the individual that pays the tax, it is the responsibility of the company to withhold that tax on behalf of the individual and pay it to the government, right? So the next one we have here is the business name. So business names are basically ventures, enterprises that people register in order to do business, right? So what taxes do the business name owner owe? First of all, personal income tax. I say no, and I think this is very quite controversial. And this is because it is the individual that pays the tax and not the business name. So it's not a function of the business name profit. It is a function of the income of the individual. The next one is the company income tax. Of course, it's not a company, so it does not pay company income tax. The next one is value-added tax. It can charge value-added tax once it meets the criteria. It can charge withholding tax once it meets the criteria. It can charge pay as you earn if it has staff, right, that meets the criteria. So that's for businesses. Then, of course, we have company, that's limited liability. These are the big boys. People who have the LLC in front of their name, or should I say LTD, sorry, right? They're the big boys. So, of course, they are not an individual, same with business name, right? It is the individuals that own the company that pay this tax, but the company itself does not pay personal income tax. Of course, they pay company income tax because they are a separate entity. So the entity itself pays tax. If they meet the threshold also, they are authorized to charge value-added tax. They are authorized to charge withholding tax, and they are authorized to charge pay as you earn if they have staff. And the last group here is the non-for-profit, right? I'm not sure people here do non-for-profit, but let's just talk about non-for-profit. So non-for-profit, again, it is an entity. It does not pay personal income tax. It does not pay company income tax. But it will be worthy to note that if you leave the context of your non-for-profit and you start doing business, you will pay company income tax, right? Then it cannot charge value-added tax. Obviously, it's a charity, right? Then withholding tax, it can charge withholding tax. So if they employ services of professionals or they have suppliers, all of that, they can charge withholding tax. Then they also pay as you earn for their staff, right? So that's about, so with this table alone, right? If this is the only thing you understand from this class, you're pretty much good. It gives you an idea. Please, sorry. It gives you an idea what your taxes are, right? Please, sorry, man. Okay, so after talking about the exposure table, the next thing I want to basically talk about is another very huge topic that has been trending, which is the business name. Now, you understand different exposures, right? Now, as a business owner, maybe you're starting afresh or you've been hearing switch your business and all of those things, right? The next question will be, what really is the difference between the business name and the limited liability? at least coming from a tax perspective, right? What is the difference? Why should I do a business name? Should I do a limited liability? Now, if you look at it, I would not even say this is basically a tax perspective. I would say it's a legal perspective. Now, right, this should not be taxing. This should be basically a description. Now, for entity, as a business name, you're one and the same, right? You are the business. A limited liability, you're separate from the business. So the law views you as a separate legal entity. Indemnity means being able to, how would I put it now? Indemnify yourself from risk. I'm using the word to define it. Basically, separate yourself, right? The ability for you to absorb risk. Okay, so as a business name, you don't have any indemnity. Whatever risk the business carries, you carry that risk. But as a limited liability, you're only limited by the shares you own in the company. Okay, what is the cost? The cost for operating a business name is relatively cheap, while it is more pricey to operate a limited liability. Okay. Then compliance. Compliance for a business name is not very strict. And that's because they view the business name owner as small businesses, right? You just so the business name, what's it called? The business name compliance is not very strict, right? They view as a small business owner. They don't even give you certificate. Right? So as a business, you cannot get tax certificate, especially because you don't pay company income tax, right? But why for the limited liability? Because you're a separate entity, it is very strict. Compliance is very strict. You have to do reporting and all of those things, right? Then for structure, again, the business name is not really structured. They don't see that a structured organization because, again, the individual and the business name are one and the same. But for limited liability, there's proper structure. You can have directors, you can get shareholders, and basically put things in place, right? And establish something really good and great. Then access to capital, which is another major reason why people go for limited liability. For business, then nobody will really take you serious, right? Besides friends and family. But with a limited liability, you can get unlimited access to loans, right? Because obviously you'll be able to present your financials, see what's going on in your business and the likes. That's not to say as a business thing, you can prepare your financials, but you're not really obligated by law to do so. Okay, so let's go. So who should choose a business name? I would say a freelancer, somebody who is just doing his own thing, a professional like myself, maybe a consultant and the likes. You don't need all of the compliance stress. An agent, so maybe you are a house agent, those kind of things, middleman, those kind of things. You can do well with a business name. Then basically any small retail business, right? You're not doing a lot of numbers. You can do well. So basically, if you're a solopreneur, the business name is designed for you, right? That's what it's designed for solopreneurs. Okay. Then who should choose the limited liability? I'll say anybody into the financial services, people who basically want to put proper structures in place. If you're dealing with high risk goods and services, some of you that are doing importation in millions, I would recommend business because even if it boss people money in your hand, rather than for them to sue you, they will sue the business, right? For financing, so if you're looking to get access to loans and the right likes, you might want to consider the limited liability. Turnover over 500 million. I will explain basically my concept or my idea around the 500 million number maybe later down the class, right? So even if you're doing above 100 million or so, you can still make do with the business name, right? But once you're doing over 500, let's say even 400, I would recommend that at this point you can hire compliance people, right? It's not even a matter of money now. Then of course, if you want to stay compliant and do all the necessary and right things, then limited liability is your best bet. Okay, especially when you need stuff like tax certificate. If you're planning to jackpot, limited liability is your best bet because it will give you tax certificate that will reflect how much your business is making without all of those tax liabilities on it. Excuse me. Taxes and thresholds. So with regards to the different taxes that we've mentioned earlier on, right? What are the thresholds that enables you to say, okay, if I make this amount of money, or this is when I start paying tax, right? So the threshold is like that cutoff point where when you get to, you know that okay, you done the old tax with that. Okay, so for personal income tax, the threshold is 1.2 million naira, right? And the percentage for this tax is basically from 15 to 25%, obviously after removing all the deductions. I know someone will say, oh, okay, but the tax law says 800,000 naira. Sure, it's 800,000 naira, but if you understand how taxes work, you understand that there are certain what's it called, allowances that you're meant to take and they're encouraging you to take. And once you do that, at least the least that will happen that anybody from 100,000 naira and below would not be paying taxes, right? So that's why we have a threshold of 1.2 million naira. You have a company income tax is at 30%, and the threshold is 100 million naira, which means that if you own a company, you will not be paying company income tax unless your revenue gets to 100 million. Again, revenue is not profit, right? Profit is different. If they say when your profit gets 100 million, that means probably nobody will be paying tax in Nigeria except Dangote, right? Because most people will tell you they don't make profit, but it's not profit, it's revenue, right? So once your sales gets to 100 million, you'll be paying tax. It will be rewarding to know that if you're a professional here, meaning you offer professional services, this rule does not apply to you. So they call it the small business rule. Right? So 100 million naira is the threshold for small businesses, but it is not applicable for professional services. Okay, that said, you have value added tax. Value added tax is basically 7.5%, right? And the threshold is 100 million naira as well. So if you're doing under 100 million naira, the law considers you a small business. So you are not meant to be charging anybody VAT. Of course, they will charge you VAT, but you cannot charge VAT. Okay. Then you have withholding tax. Withholding tax ranges from 5 to 10%, depending on. Please, Olu Sawyer, kindly mute. Withholding tax ranges between 5 to 10%, right? Again, the threshold is 100 million naira. Then you have with pay as you earn, which is very similar to, like I mentioned, personal income tax. But again, it is the salary earners that do pay as you earn because it is meant to be paid on a monthly basis. Okay, so those are the thresholds for different taxes. Another thing we would like to talk about is how then does this tax affect your bank? How does your bank come in, right? First thing I would like to point out is in Nigeria, we do not do automatic tax, which means that the government will not enter your account and remove money. I know recently they said, we'll come and take money from your account and all of those things. I think most people do not understand the context of that message. What they are basically saying is if you owe us tax, now for you to get to the point of owing the government tax, it simply means that an assessment has been done. Now, in a normal scale of things, how taxes work in Nigeria, we'll call it self-assessment. So at the end of every financial period, right, or your accounting period, you are meant to tell the government how much you make. So you go to the tax man, right? Depending on the taxes that you're trying to file, you say, oh, these are my income, these are my expenses, and these are my taxes, or these are the taxes I believe I owe, right? So you file all of those taxes. Now, where the government now say, okay, they want to come and take money from your account is, first of all, one, if you refuse to do what you're supposed to do, which means that you've refused to file, you've refused to self-assess, you've refused to declare your taxes, right? Then the government now take it upon themselves to now do what they also call best of judgment, meaning from their own data, from their own analysis, they believe that this is your income, these are your expenses, and these are the taxes due. So they will give you an assessment since you refuse to do an assessment yourself, right? So I always encourage people to file their taxes, right? So that is one. Now, it is, again, like I mentioned, tax is not automatic, unlike maybe other parts of the world where they automatically remove tax from you. Then at the end of the period, you now go and file your taxes. And if you paid excess, they'll give you tax returns and the likes. And people are like, why does Nigeria not give tax returns? This is simply why they don't give tax returns in Nigeria, because you don't how will I put it now? You set assets, right? You set assets. So it is you that tells the government how much you owe. They can disagree, they can agree, but that's the topic for another day. But in general, you tell the government how much taxes that you owe. That is how taxes operate in Nigeria. So how does your bank come in? So it's clear in the new tax law, they are saying for individual accounts, right? Once your cumulative transactions exceed 25 million naira, and this should be quarterly, so I need to include that quarterly. So if your so in the tax law it says monthly, but I don't know if you do Taiwo Yedele, I what the name. He has reviewed it and said it is quarterly. So meaning between January to March now, who should be the first quarter, right? One would expect that the banks will send a report to the taxman and say, okay, these are the people that had over 25 million naira in transactions for individual accounts, right? And they will start working on those facts. And also for corporate people, they now say, okay, these are the people. Oh, again, I made a mistake here. This is 100 million naira, pardon me, sorry, right? For corporate accounts, if you do over 100 million naira quarterly, that means that they will also report you for tax investigation. Again, this does not mean that they will come and collect money from your account. The taxman will always write you first, right? Please don't ignore. If they write you, don't ignore. Ignoring itself is even another penalty. To avoid, right, them coming to give you a best of judgment, it just goes haywire from there. I would not recommend it. Okay, so yeah. So now, what are the key changes in the new tax law versus the old one? Right. So if some of you have been private taxpayers before now and you want to understand, okay, what is really changing about the new tax law? First things first, right? There's really no new law in the new tax law. What's changed are basically things like enforcement, percentages, and the like. But there's really no new tax law, right? Basically, the only thing that changes, okay, how will all of these things be filed? How will they enforce it? What are the new, I wouldn't call it new percentage, new thresholds, right? Those are the things that were basically moved around, okay? But the tax laws themselves are not really new. Okay, it's important to state that. So the number one thing, and I think one of the most important and very good one, is the input VAT. So before now, with the old tax law, right? Okay, I don't know if VAT has been very popular. I probably have heard VAT, or everybody here has probably paid VAT at one point or the other, right? VAT is that extra money they add to your invoice, right? Before they sell something to you or render a service. Now, with the old tax law, you can only claim VAT on direct purchases, right? You can only claim VAT on direct purchases. But with the new tax law, they are saying any expense you make for the business, right, you can claim your input VAT. Right. So input VAT is basically the VAT that you pay to other people, right? Versus the VAT you pay to other people is called input VAT. The VAT that they pay to you is called output VAT, meaning you're supposed to pay to the government. But the government is not saying whatever VAT that you pay to anybody, bring it, right, and use it to reduce what you're supposed to pay to them, so that you pay only the difference if there is any difference. Okay, and even if there's no difference, if the government is owing you, they will give you balance. That's what they are saying. But me personally, I don't believe it. Right? But if you can use it to zero off your balance, then my dear, you are a winner. Okay, so that is what it is with input VAT. The another important thing is capital gains computation. What are capital gains? Right. Capital gains are basically gains from assets that you sell. So if you are a company or an individual and you have certain assets, right, the gains that you make from those assets, you are supposed to pay tax on it. So let's say you own a building, right, and you sell it off. Okay, although there are obviously several exemptions to this. If it's a building that you are staying and all of those things, you are not required to pay capital gains tax on it. If you didn't make over, I think, 10 million naira, you are not required to pay capital gains tax on it. If it's for company, if you sold off shares, I think less than 150 million, you're not required to pay capital gains tax anymore. We're not talking about exceptions, right? We're just talking about, okay, how is all of these taxes computed? So for capital gains, they've said you compute it based on the what I would like to call the taxes you're filing for. So before now, you file for capital gains separately, but they're not saying, no, while you're filing for your company income tax or your personal income tax, include your capital gains and file it according to that computation. So if it's company, that means capital gains tax will now be 30%. If it's personal income tax you're filing, that means capital gains tax will now be between 15% to 25%. Remember this calculation that we said here, 15 to 25, 30% for companies. So that's basically what I am referring to, right? Okay, where were we? Where were we? Where were we? Okay, yeah. So then the next key change in the new tax law, right, is the elimination of medium-sized businesses. So what are medium-sized businesses? You know this wave of 100 million naira threshold. Before now, there were basically three thresholds, right? Small business started from 25 million naira, which means that if you are doing under 25, how would I put it now? Between 25 million to 50 million, you're considered small business. Between, or should I say 0 to 50 million, small business. Between 50 to 100, right, medium-sized business. Then from 100 and above, you're considered a big business. But with the new tax law, they've removed all of those 25 to 50, 50 to 100. They say, okay, if you are below 100 million, right, you are a small business. Above 100 million, you are a big business. So people above 100 million should only be the people who should be bothered about taxes, right? So that is what they've said. And they introduced what I like to call the development levy. So development levy simply replaced other levies that you pay, right, when filing company income tax, which include the ETF, police trust funds, and like. So development levy just says, okay, let's remove all the different rebates. Let's just file one wholesome tax and we're good. Okay. Then they abolished what we call the minimum tax. What is minimum tax? Minimum tax is that tax that you pay. I think it was 1%, right, of your gross revenue. So if you've done business for more than 4 years and you're still not making profit, the government requires you to pay at least 1% of your turnover in taxes. Now, but with the new tax law, they're saying, oh, if you're not making profit, don't worry. Keep striving, keep hustling. We don't need tax from you, right? We don't need income tax from you. I think that's the right word. We don't need income tax from you, so you should not bother. However, in the next key change, they're saying if you're a big business and you're doing over 20 billion naira, they've put you at an effective tax rate of 15%, which means you must, right, you would be remitting 15% to the government, at least 15%. So depending on, so if your revenue is more than, is enough that your tax is more than 50%, then you pay that. But if your tax, or you are not making profit, or your tax is not up to 50% of your revenue, you pay 15% of your revenue as tax to the government. But that is when you get to 20 billion. I know there are some big people in this house. They don't really show themselves, so I needed to add that. Okay. So without further ado, I think our time is going, so that we can get to the Q&A session sharp. We're going to talk about personal income tax, right? I think this has been very popular, but one thing I want to do, I want to basically just show you all how to calculate personal income tax, because we are even currently in the season of filing personal income tax. I think the tax guy just released the statement recently that before March 31st, everybody who made an income, right, or who every taxable person should go and file their personal income tax. So how do you file this personal income tax? Okay, what I'm going to do now, let me see, let me quickly stop sharing my screen. Okay, coming in a moment. Let me share. Okay, so to file your personal income tax, what you just do is pick up your phone and type tax calculator, right? You come here, you click on this first one, presidential fiscal policy, you'll be brought to this page, right? This is where you calculate your personal income. Now, if you look at this page, one very misconception with personal income tax, or one very common question I ask is, how do I claim my expenses? Now, when it comes to personal income tax, right, in practice, you don't claim any, it's not even in practice. If you look at this is the calculator the government gave us, right? And if you see here, enter your gross annual income. Then you see all the deductions you can take. There's nothing like expenses here, which means that you can't claim expenses of personal income tax. So if you're not, so I strongly believe that this is designed for salary earners where they make all of these contributions. For the average Nigerians, they really don't have most of these contributions. And the taxman knows this, right? The taxman knows this. So they expect you on your own to use your common sense and deduct your expenses and declare what you consider as your taxable income. It sounds funny, but that is how it happens in practice, right? You declare what you call your taxable income. So as an individual, you can now say, okay, my taxable income for the year 2025, because if you're filing now, you'll be filing for last year. So you can now say, my taxable income for the year 2025 is, let's say, 10 million, right? For me, the only contribution I have is rent. I really will not bother about this one. I'm married, but I don't have life insurance yet. I think I should go and consider that. But I'll say, okay, my rent, right? The law says I can take a maximum of 500,000. If you want to claim 500,000, at least all you can put here is, what's it called? 2.5 million. And I will encourage you to take it, right? From my experience, nobody will come and be disturbing you about 500,000 allowance that you took. And especially because this rent allowance replaced what they call consolidated relief allowance, which was in the old law, right? I think if you look at this comparison here, you see it here, right? Consolidated relief allowance and personal relief, plenty relief, but this what's it called now? Annual DC replaced all of that. So they expect you to take your annual your rent allowance, which they've capped at 500,000. Nobody's going to fight you. If they fight you, go do one receipt, give them, and everybody will calm down. But that's by the way, right? So my point is, if you want to calculate your personal income tax, first of all, go to come here, right? Put the amount you want to declare, and have an idea of how much the taxman will ask you to pay. Because this thing I'm doing here, or I just did, as simple as it is what the taxman will be doing for you, right? So you want to know before you go there. Don't go there without a figure, please. If you're going to the tax office to file your personal income tax, don't go there without a figure, right? Whatever figure you go there with, obviously they can dispute, they can argue it, they can give you their own profiling, but you want to have a budget in mind before you go so that you can control the narrative, right? Yeah, when it comes to personal income tax, for lack of a better word, it's more about negotiations. How well can you negotiate your taxes, right? But you also want to have something in mind. Whatever you declare as your annual income, right? So you cannot say, remember when I was talking about the advantages and the disadvantages of personal income tax and company, I said if you are planning to jackpot and you need a tax clearance certificate, a company will be better for you, because for a company you can declare you make 90 million naira. Because you're a small business, you are paying zero tax. But if you declare 90 million naira as an individual, let's even put it here, right? Let's put 90 million naira and see how much taxes you pay. You see, you are paying over 89 million naira. Okay, no, that's not the tax. Your taxes will be over 20 million naira, right, in the year. So if it will actually pay you better if you're limited liability and you for documentation purpose. But if all of those big numbers does not really bother you, don't need it for anything, then you might as well, right, declare something much more small, because you're a small individual. This is your income, and again you calculate it for 10 million naira. You are basically paying in a year. You'll be paying 1.5 million naira, right? So if this is too much for you, you can go here again, change it. So that's the idea. You can say, okay, 10 million is too much. Let me change it to 5 million. I think I've wasted too much time in this place. Let's move on. So basically, this is how you calculate it. You come here, as you can see, first 800,000 naira zero, the next 2.2 million naira, they charge it at 15%, 330. The next 9 million naira, 18%, 1.5, 270. So they added this because there's nothing else to charge. The money don't finish as at 1.5 million, right? So your total taxes due for 5 million naira is 600,000. So if you are a staff, that means monthly pay will be 50,000. If you are a business owner, right? A business owner, you'll be paying 600,000 naira for 5 million naira annual income. So basically, that is how it would be computed, right? Let's move on. Okay, so we've basically talked about how to calculate personal income tax. So what are some of the exemptions and loopholes in personal income tax? Like I mentioned, 1.2 million naira, especially when you add your rent allowance like we just done, right? You know that, okay, it simply means that from anybody, any 100,000 naira below will not be paying a personal income tax. Gift are exempt. So if you receive gift, right, into your personal account or whatever it is not an amount you declare for revenue, right? It's not revenue. And again, like I mentioned, personal income tax is done through self-assessment. Means you go to the tax man and you basically tell them how much you make, which is a very big loophole in the tax administration. Okay. So the next one we're going to be talking about is the company income tax. Company income tax is basically 30% of your accessible profit. I call it accessible profit because it is after the removal of all your company expenses. Then whatever is left, you charge 30% to it. Again, like we mentioned, no minimum tax, development levy of 4%, and 15% effective tax rate for businesses doing over 20 billion naira and above in turnover. So how do you calculate company income tax? First of all, you bring out your revenue, right? Then you add your capital gains. We've discussed capital gains. Capital gains is the difference between how much you bought an asset and how much you sold it. So you bought an equipment, you bought a house, you bought a land, whatever it is, right? And you sell in a future date for profit. The margin on top is what you charge capital gains on. Okay, then you add all your allowable expenses. We're going to be discussing allowable expenses next. Then you remove all your previous losses. What are previous losses? So if you're a company that you've been operating for more than 1 year, and in the previous year you made a loss, right? The government allows you to what's it called now? To deduct that loss before you declare to deduct that loss against your revenue in the following year. Okay, then of course you less your capital allowance. What is capital allowance? Capital allowance is like depreciation. If you've heard the word depreciation, it's capital allowance is basically the name they call it when it comes to tax, which means that all the huge expenses, right? When you are talking big money in accounting, you like to call it capital, right? So any huge expense you made in the business is called capital, maybe capital expense or capital expenditure. Okay, so the government is saying, okay, instead of removing all of those expenses once, take it bit by bit. Okay, so that is basically what capital allowance is. So if, for instance, now you bought a car or you bought a machine for the business, you can't take it all at once. The government say, okay, take 25% this year for, then you take 25% for 4 years. Okay, so that 25% is what you bring down here. Then, of course, after removing and adding all of this, you get your taxable profit. Then you add your 30% to get your tax payable. Okay. Then, what are some of the allowable expenses? We have cost of goods sold. Cost of goods sold is simply the direct cost of that product or service, right? Operating expenses include things like repairs, logistics, and the likes, travel and accommodation, any expenses you do in making sure that okay, you can deliver the goods or services to the business. Those are your operating expenses. Selling expenses will include things like marketing, Facebook ads, and the likes. Then professional fees. If you need to hire consultants, lawyers, accountants, auditors to make sure that you are in good right standing with the government and stakeholders, of course, you can deduct all of that for tax purposes. Then finance costs. Finance costs are basically bank charges and loan expenses. That's the interest on loans. Excuse me. Okay, so that is finance cost. Then disallowable expenses, capital repaid or withdrawn. So if you put money in your business, you cannot now claim that money, right? As the what's it called now? You cannot go back and claim that money for expenses. It will not be allowed. Personal expenses, you cannot be using company money to be paying your children's school fees. It's not allowed. Taxes paid. So if you've paid taxes like company income tax, VAT already, you cannot be deducting that tax when computing your company income tax. Is not allowed. Unapproved contribution. For those of you that are using your company account to be doing a job, it is not allowed. Gift and charity, you cannot use company money to be gifting people or funding non-for-profit. One of the biggest rumors also was raining back then is to avoid tax, you should go and open a non-for-profit organization and be sending your money there that you are donating to charity. It is not allowed. Okay. So what are some of the exemptions and loopholes for company income tax? You have 100 million naira threshold, which we discussed extensively. We have self-assessment again, but for company income tax, you can't do this yourself. Or for companies, you can't do this yourself. You need the help of an auditor to help you file or prepare a financial statement, right, and present your case to the government. Then agricultural companies, of course, they have a 5-year rule, which means they will not be paying company income tax for the first 5 years of operation. Then non-for-profit, sport companies, export companies, and dividends, right? So basically, if as a company you invested in another company within Nigeria and they pay you dividends, because that money has already been taxed, right? You don't declare it for tax. It is a common practice, even for persons. So especially, let's say all those interests the banks are paying you for money you deposit. You're not supposed to be declaring all of those money because it has suffered withholding tax. It's basically an unspoken rule that money has suffered withholding tax. You do not declare it for tax again, right? So basically, that is that. Then the next one we're going to be talking about is value added tax. So value added tax, another very popular tax, is 7.5% of sales rendered or charged on goods and services in Nigeria. Threshold is 100 million naira, right? So as a company, you need to be doing over 100 million naira before you can charge value added tax. Again, this does not apply to professional services. Okay, let's go. So we cannot discuss value added tax without talking about what's it called, input tax. That we've mentioned, right? The VAT or the value added tax that you pay is simply equal to output tax less input tax. Output tax is the tax that you charge your customers. Input tax is the tax that you pay to your vendors or you pay to people who render services or you buy stuff from, right? That's input tax. So whatever VAT you pay to them, you remove it, right, from the VAT that you've collected to your customers that you want to pay to the government and pay the balance. That is basically what this is saying, okay? Then what are some of the common exemptions for VAT, right? You have basic food, rent, health, pharmaceutical, medical services, agricultural inputs and machines, baby products, sanitary towels, parts, lands, and building. Okay. Then the next one we're going to be talking about very briefly before we round up is withholding tax. So withholding tax is what's it called now? Is an advanced tax. So this tax is one of the tax that you can use to remove or decrease your income tax. So it is an income tax, but it is not you that is paying. If, for instance, you render services or you make a supply to somebody, they deduct that tax and pay it on your behalf. That's the idea. It is a tax that is paid on your behalf is paid on the behalf of the person or a company, right? Again, for you to charge anybody withholding tax, you must be a big business doing over 100 million naira, or you should not bother, right? So only big companies that should be charging withholding tax. Okay. So what is withholding tax charged on, right? So what are the type of transactions that attract withholding tax? Number one, dividends. So if you're a company, you're paying dividends to your directors, you charge them withholding tax. We're paying to directors of companies, right? You charge 10%. If you are paying interest, just like the banks are paying us, you charge 10%. Rent. So if as a company you rent a building from another company, right, or individual, whatever the case may be, you charge withholding tax. Then royalty. Excuse me. Let me take water, please. Their royalties. Royalties for companies 10%, individuals 5%. Then you have contracts. So if you execute contract or you give people contract, that company or individual 5%. Consulting and professional fees. If you employ a company, 10%, individual 5%. Commissions 10%, individuals 5%. Director fee 10%, right? So those are the transactions in a nutshell that attract withholding tax charge. Okay. Then let's talk about the Ogbonge penalties, filing, when to file, how to file, where to file, right? So looking again, like I said, I'm trying to focus on the 5 major taxes that would affect you, right? So for personal income tax, like we've earlier established, you have between January and March to file it, right? And you file it to the state revenue services, right? Then you have liability, penalty, and interest. Okay, so which simply means that if you don't file it, if tax that you're supposed to file and pay, which is what we call the liability, you will still file it. Then they will add penalty on top of it. Penalty is usually 10%, right? Then there's interest. Interest is on like they'll call it the CBN tax rate, right, which is around 18%. So which means that on top of the taxes that you're supposed to pay, they are adding extra 28% in extra charges for failing to file within this first quarter, right? So that's that. Then for company income tax, you have 6 months to file that one, which means that if you've registered your company, right, and you've been doing business for more than a year, as maybe you registered your company early last year and you have company income tax, you have a legal liability company, you have between now and June, that's 6 months, right, to file it, okay? And you file it to the Federal Revenue Service, which is now called the NROS, right? Again, liability, penalty, and interest. Again, value added tax, any value added tax that you charge, again, it's worthy to note, if you are a big business and you don't charge it, does not mean you will not pay it to if we say it's on your head. So please charge it and pay, right? So yes, you charge your 7.5% of VAT, you pay it the following month. So for any VAT that you charge in January, you pay it on or before the 21st of February, right? That's basically what it's saying. And you pay it to the Federal Revenue Service. Withholding tax, depending on who you charge it from, you have again between 1st to 21st of the following month to pay it either to the state or to the federal government, right? Then pay as you earn, you have on or before the 10th of the following month to pay your pay as you earn on behalf of the staff to the state government. Okay. Then what are some of the other penalties for non-compliance? Right? Failure to register as a taxable person. So if you have a business, limited liability or business name, you have to register with the tax authorities, right? So if you don't register, they're saying 15,000 naira for the first month and 25,000 naira for every subsequent month that you have defaulted, right? So if you have a company, please go and register. If not, if they come for you, they will be coming with all of these penalties. Okay. So most times it's actually better you go and meet them first and tell them that okay, you never start business before. That's why you never come, but now you don't start, so you don't come. So excuse me. But if they have to come and meet you first, then it's a different ballgame entirely. Okay, so I always recommend you go there and control the narrative. Then awarding contracts to unregistered persons. So if you're a business and you're awarding contracts to people who are not registered businesses and all of that, right, or registered individuals for tax purposes, then there is a fine that you pay of 5 million naira, right? Failure to file your tax return. So if you now say, you are trying to avoid, you are not filing at all, when they cash you 100,000 naira for the first month and 50,000 naira for subsequent months. So if you are not filing, no, be it VAT, be it company income tax, be it this thing, there is a fine for you. Failure to keep and provide accounting record. You cannot say, you will not say, okay, I'm not keeping my record. That's why I cannot file. Again, they don't touch you penalty. So, like they say, to whom much is given, much is expected. The government, even if they're not giving you much, they're giving you the ability to do business in another name. So you should be responsible and do your due diligence, right? You might not even be paying tax. You might be surprised that you're not even a taxable person, but they expect you to file. So it's not a case of, okay, I'm not making 100 million yet, or I'm not making 1 billion yet. No, the law expects you to file as long as you are a taxable person, right? Meaning that you're making revenue, okay? Refusal to grant access to deploy tax technology. So this tax technology, I will just skip this because basically for the big boys, and they are the ones deploying it themselves. So no need to worry about that. If they want you to use it for your system, for your business, they will come and tell you. Failure to use the required fiscalization system, right? Again, still bothered around their technology. Failure to deduct and withhold required tax and source. So if you're supposed to charge somebody withholding tax, charge somebody VAT, and you do not do it, they said they will charge you 40% extra, right, or the amount you're supposed to deduct or withhold. Okay, failure to now remit the taxes that you have deducted, you will pay and pay and pay, right? Payment of the amount due. So the taxes itself, then again, like I said, the penalty 10% administrative penalty, then interest at prevailing CBN rate. All of those they will add to you. Okay. Then failure to notify business address. So if, for instance, now when you register your business with CAC, you put a Brahmadesoya, then you now move to VGC. You did not notify the tax man, they are not looking for you, they will fine you. Okay, not compliance with notices and summon. So they summon you, you did not respond to them. They will dash you 100,000 naira fine for the first day and 10,000 naira for any day that you default to reply to them. Non-compliance for virtual asset service providers. So, okay, so this is for virtual asset service people for what they would like to call KYC, right? Again, penalty 10 million naira if you don't comply. Then fraud and false declaration. So if you declare falsely, personal tax officials or whatever it is, there is a fine ranging from 1 million naira to 2 million naira. So as you can see, plenty fines everywhere. Like I said in my video, right? But all of this is actually easy if you understand how all of this work. Like we mentioned earlier on, right? Know when to file, know where to file. If you look at the various taxes, if you're here and you've never been tax compliant before, to avoid all of these penalties, actually simple. First of all, like we've mentioned, we have two major tax bodies. We want to make sure that you are registered with each of them, meaning you're registered with the state government and you're registered with the federal government. For the federal government, your monthly obligations are basically VAT and withholding tax. But withholding tax will only occur if you have any of these transactions within that month. If not, you don't have to bother about withholding tax. For most people, they won't even bother about withholding tax for a whole year. But what you have to do as a business is, you file value added tax, which is VAT. So whether you're a small business or a big business, you have to file that. Now, you can file zero VAT, right? You can file zero VAT. So month on month, especially if you know you will not cross 100 billion naira threshold in a year, then you will be filing 00. But you are required to file, right? Being a small business is not an excuse in a new tax law. Okay, that responsibility to file is on you to avoid all of the penalties. But let's say most people will be paying penalties rather than actual taxes. So you want to ensure that you file, right? I hope we can do all of filing classes here. I don't have an account for that. Okay. So, okay. I think I replicated this, right? banks and compliance. We've already discussed that. And tax planning and strategy. So it is no longer secret that the taxman is coming, right? They are ready. They are ready. The question is, are you? And for you to be ready for the taxman, the number one thing you need is better records. You just need to keep better records. Know where your money is going to, know what is coming into your account, know what the purpose is, because you would be made to give account. You might not give account today. There's this popular video that was saying that the man, I think he was a boxer, and they beat him so bad. They were like, maybe not today, maybe not tomorrow, but surely I will be champion. In this case, surely the taxman will come. Maybe not today, maybe not tomorrow, maybe not even this year, but the taxman will come, right? And it's not when they come that you start planning. Just know that if you've not planned or prepared for them before, you will beg and they will use you shine, for lack of a better word. So you want to avoid them using you to shine, right? Then again, you want to separate your personal transactions from your business, right? So if you have to pay yourself a salary, please do that. Separate yourself from the business, right? Pay yourself a salary, regularize with the tax authority. So like I just mentioned a while back, you want to get registered, right, with the federal and the state tax authorities, file your taxes as when due, avoid any penalties, avoid begging these people, right? It's just not worth it. Then if you are giving invoices, please attach your tax IDs. So anybody that's charging you VAT, charging you withholding tax, they will pay it to your account. So everybody has a tax account, right, which they remit your taxes to. Okay, so yes, that is that. Then of course, stay updated. I don't know why anytime I prepare slides, I don't even put my profile, right? It's a very weird thing. But again, my name is Menal Juri. If you've not seen my face, you can follow me to stay updated with the new tax law, right? I basically talk about taxes on my what I call it channel now, on my page. Okay, that's the right word. On my page, accounts and data on Instagram, TikTok. I'm not on Twitter yet, but I'm trying out. Maybe I will come there very soon. Basically, that is that. And thank you very much. I think it's time for some questions. Whew.
Thank you. Thank you very much.
Thank you, ma'am.
Thank you. Thank you very much. So I'm sure everybody has questions. So I don't know how we are going to do it.
So they can
Many of us
unmute
don't have
and ask,
our
right?
microphones.
Can we
Okay, we can do what?
what we can do, right? In the support group, anybody that wants to speak should put, maybe they should be putting their name there without me calling them to unmute and speak.
Oh, okay. Okay, that's
I
fine.
think,
Me, I'm the
yeah.
first person, Sha.
Sorry? No
I
problem. We're
said
here together.
I'm the first person. Okay, so my question is, or my
But let
questions
me
are,
just, sorry, a minute, a minute. Let me just start. If you want to speak, just say your name. Let me type it
uh
there.
all right. So my question is, or my questions are, that 100 million naira threshold, like I always say, is a very small amount for my type of business, right? It's for a year, a full year. It's a very small amount. So in a case where you've been doing that for years and you've never filed your taxes, you've never paid any taxes, what is like what do you think such a person should do? How do they get started? Because I have quite a lot of friends as well too. That's they sell more than that, way more than that, and they've never filed any taxes. They're just living their life. So what do you think they should do? What's the first thing to do in such a situation?
Okay, so that one is easy. When you're registering for tax, right, for every tax form they give you to fill, there's something that is always there, and it's called commencement date, which means when did you commence this? Now, for most people that don't understand it, they'll probably go and put 5 years ago, 3 years ago, 10 years ago, right? The date on that form or whatever that you report, right, it dictates that the taxman will see that you've commenced business. So if you now, for instance, now we're in 2026, you now say, oh, I commenced business in 2024, I commenced business in 2020. The taxman expects you to start paying taxes from 2020. So when they create your profile for you, it will include all of those taxes that you have to file. Now, in reality, when you go to the tax office, right, I know it's not the proper thing to do. Ideally, they don't even allow you to register for these things themselves because they want the opportunity to assess you, to know if you are telling the truth.
Yes.
They know that you probably don't start business since, and you did not start business in 2026. So most times it's more of a question of, okay, what do you get for the boys so that they can bring you up to date. And especially because they know that if they say you should go and pay back taxes, you run, right? They would rather get you in the system and start paying going forward and bother about collecting. So again, first of all, it's at discretion, right? Negotiate with them, tell them that, oh, okay, you want to start afresh. This is even a new year, it's a very perfect time to start afresh. You declare January 1st, get that commencement date. You might have to sort them, right? But at least you know that you will not be paying the backlog. But again, this will only happen if you have not registered with them. For some people, they might already be registered, they didn't even know. I've had a number of cases where you thought, oh man, no, I don't have any tax anywhere, I've not registered before, only to find out that maybe the person that did their CAC had registered them somewhere and they had pending taxes already. So again, you have to find out if you're, first of all, you're already registered. If you're already registered, you will not be able to do that, right? For most people who maybe opened their business recently, it is required that for you to do your tax registration before you can get tax ID for bank and all of that. So for most, the chances that you're already registered somewhere is high. But if you're not, good luck. You can declare a fresh commencement date. So I think that answers your question.
Okay. I just hope my questions are other people's questions too. So another question I have is for staffs. You are saying that if we have any
Sorry,
staff.
please, let me just say something so that we can take as much people as possible. We're taking 2 questions from everybody. So this will be
All
your last
right.
question, please.
All
Thank you.
right. All right. So for our staffs, you are saying that we have to file for their taxes too, right? If they are earning more than 1.2 million naira altogether for a year.
Yes, please.
That's a lot of work. Oh. So you pay
And that's why
taxes.
people like us exist.
Ah, you pay taxes for your company, then you pay for your staff, then you pay for yourself, basically. Okay.
Again, so who much is
So
given, much is expected.
ah,
So you
okay.
want, so now the only taxes, so if you look at it holistically, right? You pay taxes for the company, you pay taxes for yourself, and you're not really paying taxes for the staff. The staff are paying their taxes because the tax you are paying is also an expense to that business. You are basically paying the staff salary, then from there you deduct tax and remit to the government. It's not the company. So it's basically 2 taxes you are paying. The one you are paying on the company's income and your own personal income.
Okay. But
Again, it's not
Omaku
what
was
is due,
so.
but it's agreeable.
Omaku was so.
So I think the next person is Ricky. Please,
Yeah.
Ricky.
Let me mute myself. Where is Ricky? Ricky.
Ricky.
Yeah, good evening, sir.
Good evening.
Yes, sir. I want to ask that my service
I
at the
think
end of
your background is noisy. Can you please go to somewhere quiet?
okay. I want to ask that is this class have a record that you can drop for us after this class?
Yes,
Because
yes,
the
I'm
service is not
recording
high,
it.
not big yet. That's what I want to ask. Because me too, I'm an accountancy student, so I understand it better. But the service is not that good at the end of my day.
Okay, no problem. I'll record, I'll drop it. By tomorrow it should be ready. I'll drop it.
Okay,
I'll,
thank
yeah,
you very
I'll
much.
get it. If possible, say I'll upload it on YouTube as well. Okay. So the next person, Ricky does not have a question for us. Magic fingers, please.
Good evening, sir. Good evening, everyone. My
Good evening.
question is, the VAT. I know taxes has been on income. But what I want to understand is this VAT that we are talking about, is it supposed to be charged on the cost of the goods or on the profit that you are adding to the goods?
So it's
I don't know
charged
if you
on
understand me.
sales. I understand. So cost is not charged on cost. It's charged on the sales. No, sales is cost plus profit, right?
Yes, yes,
Uh-huh. So it is charged on sales, not on cost, not on profit.
profit.
So,
Oh, okay.
so the idea is, if for example you're buying from a Nigerian company, you are most likely
Yes,
already charged VAT. So I will give you go
yes.
ahead to remove 7.5% of your cost price as input VAT, which means that you'll be paying. So let's do a bit of mathematics, right? I don't know if I can. So let's say, okay, let's do imaginary math. Let's say you buy something
Okay,
for 1,000 naira. That's the cost price. And what can we
okay.
put now? Okay, let's
Yes,
say you buy jewelry, right? In the jewelry class. Let's say you buy jewelry for 1,000 naira,
okay.
right? Maybe stainless steel 1,000 naira,
Yes,
and you sell for 2,000 naira. Now, if you buy for 1,000 naira from your supplier, it means that your
okay.
supplier has charged you 7.5%, which is 75 naira. So that 75 naira becomes your input VAT. That's why it's very good for you to keep record. So that 75 naira becomes your input VAT. Now, when you sell
Okay.
at 2,000 naira, it means that you have an output VAT of 150,000, which is 7.5% of 2,000 naira. So the law is now saying the 75,000 naira that your supplier has already charged you,
Charge
remove it
you.
from the
Okay.
150,000 and pay the balance. Again, the balance will be how much? 75,000. I mean 75
Seven,
naira.
yes,
That's what
75 naira. Yes.
so ideally you are charging 7.5 on your 2,000. The supplier is charging on 1,000 because that is his sales price. 2,000 is your sales
Okay.
price. So everybody is charging 7.5% on their sales price. Do you understand now?
Okay. Yes, I do.
Okay.
Thank you. And my second question is, I already have a tax ID and I'm
Okay.
a civil servant. So
Okay.
there's no way I will escape payee tax. You understand? There's no way I will escape payee. And I also have a business. Am I supposed to file a personal income tax aside that payee?
So because you already the thing is because you already have a tax idea, you're paying tax, it might be a blind spot. I will not tell you not to file, right? So ideally, theoretically, what you're supposed to do is called uh, additional assessment,
Okay.
right? Meaning you already have taxes paid on your pay from your
Yes.
9 to 5 that you do. Then from your
Yes.
business, because you are paying yourself a salary or whatever it might be called, right? You also have to pay those taxes, right?
Okay.
Now, if I were you, really, I would probably because the way as a business owner, most times what they recommend for you is the yearly one. And I've done it a number
Okay.
of times. Most times they cannot really link the should I say your monthly taxes with your annual taxes. They'll tell you it's very difficult, or even if you have to, you might probably go to their headquarters to do it, which might be costing you unnecessary money, right? So if you have a business, if even if you want to pay taxes on your name, I would recommend you go the salary route. So your 9 to 5 pays you salary, the business pays you salary. So you're
Okay.
on the same salary pay scheme. If you
Yes.
do the annual one, it might just be difficult to link both because they are basically paying to the same tax ID, but it
Account,
might
yes.
be difficult for you to put it on your tax clearance. I don't know how to explain it, but what I recommend for you is if you have a business, the business should pay you salary, and you should pay salary just like your staff, so that it's easy for you to get
Yes.
documents when you need it. That's what I would say. So don't do the
Okay,
annual one, do the monthly one if you have to.
okay.
But it might
Thank
also,
you.
like I said, it might be an oversight for you because you already are paying tax. For them to fish you out may be hard, but I would recommend just pay to avoid wahala, especially if they have to
Okay.
audit your tax.
But my business is still a small business. It's not up to 100 million. So
So they might not
I
disturb
don't
you.
think I'm paying. But you said we can do a blank return that we can just go there to file 0 naira
No, so that's for VAT. You don't find 0 naira for
for
personal
VAT.
income.
Okay, okay.
That's only
Oh,
for VAT.
okay. All right. Thank you.
Good evening. Please, I have a question.
Wait, we're going line by line. Have you written your name? Esther. I think the next person is Esther.
Yes.
Ah,
Hello.
Are you Esther?
Yes.
oh,
Okay, please go ahead.
I'm
Okay.
Esther.
So I'm the one that wrote. I'm the one going next. So
No, Esther is supposed to speak next.
after Magic Fingers, I'm the one that wrote Esther on the group.
Oh, okay, okay, okay.
Yeah. So I needed some clarification on this. So we've heard that personal business name and the individual are like the same thing. And
Okay.
also on your tax exposure table, personal income tax, okay, individual pays personal income tax, but for business name, it's giving thumbs down.
Yeah.
Yeah, um
You would
so what's
understand it.
so what's the business name? The business name, what are we paying?
What are you
Because I was
paying?
assuming it's personal income tax. Yes.
Okay, let me answer you. Very good question. Those
Okay,
days
thank you.
when we were in school, we ask questions, say, oh, very good question. Is my table still showing? Is my screen still showing?
Yeah, yes it is. Yes,
Okay,
yes.
so this is the tax exposure table you're referring to, right? So let's break things down. Now, the individual and the person, even when I was doing my comparison between individual and this, I said it that individual is one and the same person. Uh, in all honesty, as a taxman, I'm not a lawyer, right? That is more of a legal definition of business name and individual. But in terms of taxes, they are really not the same. Right.
Okay.
So the easier textbook explanation would be if you're a business name, pay personal income tax off of your business profits. But let me ask you, what if as a business name owner, like many people do, you also own like 3 LLC, you own 2 non-for-profit. Where will you not pay your personal income tax from? You see, there's a loophole there. So the idea for personal income tax is not your business name profit. If you were to go to the tax office today, right, and say you want to file your personal income tax, they will not ask you to go and bring your business name records. They will give you a form and tell you to declare your income, that's why I took my time to be straight doing that. Okay, when going, go with a number, all of those go to go. They give you a form, right? Ask you to declare your income. So the idea is you declare all your sources of income. So you cannot say, oh, I have business name A, right? That business I withdrew 10 million, or that business paid me 5 million naira last year. I have LLC B, this business gave me 20 million naira. I have investment somewhere. That investment gave me 100 million naira. You get the point. So it is not a function of a business name, a limited. It is a function of how much. So if let's assume that business name is the only business that you have, is your only source of income. Again, you don't declare from your business name profit. If the government were interested in your business name profit, they would have put a process and a procedure in place, right, for you to report it. They will not leave it open. Business
Okay.
name, yeah, business name technically pays transactional taxes, and these are the transactional taxes. All of these value-added tax, withholding tax, and pay as you earn. Basically, when these transactions occur, maybe when you sell, you collect VAT and remit to the government, right? That is what business name pays. Then, if as a business name owner, which you should, you are paying yourself a salary or you are making withdrawals from the business for personal use, those are what you declare for your what's it called now? For your PIT, not the business profits. Remember, even the business name is not mandated to really do a financial statement. So even if you were to declare profits, how will you not tell your profit? Ideally, you need an auditor, somebody qualified, to tell you what revenue, what expenses, what are qualifying expenses, what are qualifying revenue, all of those things. But the government say don't bother. So you trying to now be looking for business profit to pay tax, you are just worried about what does not really exist. That is one point. Number 2 points, right? Like I mentioned, there are two bodies that are in charge of tax, right? Two bodies, the federal government and the state government. And how do they administer this tax? If as a business name, the government writes you today for tax, they will not ask you for income tax. They will ask you for only two things: value added tax and withholding tax. Those are the see what is under their preview, right?
Yes.
That
Yes.
is what concerns them. Their concern is with corporate bodies. So they ask you for only two tax: value added tax and withholding tax. Nothing else, nothing more. If the state government writes you, they are not writing your business name. They are writing you. Hello, can I preach?
Yes.
Can I preach?
Preach.
Okay, so which simply means your business name or your this name. So if at all, right, what where in a state government this thing? Hello,
Hello.
hello, are you with me?
Yes.
Okay. So in the context of personal income tax, if they now profile you, they now say, now you get DD luxury, you are a big person on Instagram and you are telling them you're paying yourself 100,000, they cannot say, auntie, madam, why will you a whole DD? You are paying yourself 100,000. That is the kind of conversations they will have. They will not tell you that your business is making 10 million or 20 million. Right? You not consign them. You get the point.
Yeah.
So that is how personal income tax is filed. I hope with these few points of mine, I've been able to convince you and not to confuse you.
Yes. Yes. You've really convinced me. Thank you.
Okay, I think Barakat is the next person.
Hello, good evening.
Good evening, Barakat.
Yeah, my first question, thank you for the class. My first question is, if you don't make up to 100 million as a company, do you still file for tax? I know you still file for the VAT, even if you don't make up to 1 million, 100 million, but do you still file for company tax?
As a limited
Then,
liability company,
yes. Also, my second
yes,
question, how do you
yes, you do.
register for company tax and personal income tax? I've been seeing different platforms. I've seen Tax Pro Max. I've seen NRS. Yes. Please, how do you file for it and how do you register? That's the question.
Okay, so anything tax, NRS and tax promas, NRS owns tax promas, right? Now, to file, first of all, your first question, which is, will you still file, right? As a company, you must file your returns. So yes, but one, you can't do it alone. You need an auditor. And I will advertise myself. I can do that for you. But you will pay me some money. That aside, number two, where do you file? So for your company income tax, that same place where you are filing your VAT monthly, which is the tax promas, right? It is owned by NRS, and NRS is the tax body, right? Tax promas is just a product of NRS, if that makes sense. So it's
Okay,
their
yes.
website where you file taxes. It's NRS website where you file tax. So yes, you file at Tax Promax, which is owned by this thing. So that same place where you file your VAT, that is the same place you file your company income tax. Ideally, when it is due, right, it will enter automatically. You will see it, CIT, file your returns or whatever. You will see it there. So it is automatic, right?
Okay. All right.
Yes.
Thank you.
So that's that. Then LRS is for your state taxes.
All right. Okay. Thank you.
Good evening, sir.
Good
I think
evening.
I'm
Are
going
you
live.
the next person?
Yes.
That's Precious.
Yes, sir.
Okay, Precious. Thank you. Okay, that's good.
Thank you for the class. I wanted to ask, I registered my business under business name. That's December 2024, and I've never gone to file anything. But I have a tax identification number. I think it came with the CAC registration. So if I get what you said, I'm supposed to go physically somewhere to register and then start filing online before March, right?
What did you register?
I registered as business name, my business.
Okay. So you are
Yes.
basically registering with both state and federal. For the state, I would recommend that you file for personal income tax, which is last year. Right? Again, you are not filing for the business, you're filing for income that you made last year. I would recommend it just to avoid the awala. You don't really have to pay a lot of money. And you can declare that you made 2 million, 3 million. Maybe you pay like 200, 300,000. If it's too much, you might still reduce it down. It depends on your pocket. But yes, I would recommend that you file for national. So remember, taxes is always after that period. And since personal income tax is annually, if you file now, you are filing for last year. So have that at the back of your mind. That's
Okay.
really how it works. So if you are filing now, you're filing for last year. So yes, I would recommend that you go file for at least you know that if your name come up anywhere, they will see say you did pay tax already, and they will leave you alone, right? And it
Yes.
is a general school of thumb that, like I mentioned, it is the taxman that assesses you for personal income tax. So once you've done it, you will not do it again till next year.
Okay. So, like, where exactly am I going to for this state?
Which state are you in?
Lagos.
So they have several offices. If you're in Lekki, there is one in Admiralty Way inside the UBA. I think if you're in the Chevron Axis, there's one in is it UBA again and the Access Bank? That Chevron place. Now Lekki side of the state. So those are the only two offices I really know. Right.
Okay.
But I know they have an office in every local government.
Okay. But I'm not paying anything to federal.
No, if you've not gotten to 100 million, but you have to register.
So where am I going to register for this federal? The same place where I'm registering for state.
No. They have their own offices too. So for the
Okay.
federal one, you can just type it. Which area are you? Do you mind sharing?
I'm around Yaba.
Oh, they have one. I've been to one Yaba office when I went to represent somebody. So what you can just do, you just type FRS in your Google map, even
Okay.
LRS, you see the closest one to you.
Okay.
Mm.
Then if I
You
if
can
I
still
say,
hire me to do it for you.
huh? What do you say?
No worry, continue.
I want to hear what you said.
No, I say, oh, you can hire me, but that's not the focus of
Oh,
the class. Continue.
okay. Okay, and I can say, okay, I didn't make profit last year, but I just came to file. I can do that.
Again, personal income tax is not on profit. Like we
Okay.
mentioned when we're talking about personal income tax, you don't even declare, you are not deducting expenses. You're just telling them how much you paid yourself from the business or how much you withdraw from the business. It's not a function
Okay.
of whether you make profit or not.
Okay. All right. Thank you, sir.
Thank you. Next person will be Gift. Gift. If Gift is not available, to waste no more time, Abisola, please take the mic.
Okay, hello, good evening, everyone.
Good
Thank
evening.
you, Mr. Mena, for this class. Okay, so this is my question. Around last year, I think August, I registered my small business as a company, and I registered it that way because I actually wanted to position for grants, or I actually applied for a particular grant that required the businesses to be a company. So I
Yeah.
had registered as a company before the tax brouhaha, broke out. Now,
Okay.
the issue now is that as at that time, I didn't have a company business account. I was using my personal business account to, receive money from
Yeah.
clients. And the business literally started around June, July. So here's the thing. I want to file for personal income tax. And now all the transactions I've made, on that account is mostly business money. So how do I do my self-assessment that they will not, see that money as my money? Because of course they'll see it as my money, but how do I negotiate and make them realize that this is actually not my money? This is business money. And I now have a business account, but this is my own income. Is there a way I can figure it out with them? Because if they're going to charge me based on those cash, it's going to be a lot.
I understand the fear. So I think I forgot to mention when you're filing for personal income tax, right? Nobody really asks you to bring your bank statement. Uh, like I mentioned, there's really no standard for 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 lack of a better word. You can't prepare a financial report for a personal account. There's no standard for it, right? And accounting does not really work that way. And quote and unquote, tax is a child of accounting, right? There is no standard for preparing financial statements for a personal account. On a normal day, unless they're investigating you for something else, maybe you're supposed to pay taxes, you don't know how to pay. And that's when they might not require your bank account. But I think if you're doing self-assessment and the likes, nobody will tell you to bring your bank account. If they do, if they're just whining you, not agree. Nobody gives them bank statement to access, right? That is one. And even if they were to, this same thing that you told me, you can tell them. And like I said, it will not even get to the point where you so these are some of the things they look at when you go to the tax office. First of all, they will look at your address. If you are a married person, if you have a car, and you have a travel history, how many companies do you have shares in? Do you have investments that they can see in their system? Right? Those are the things that they will use to access you to put you on the taxable bracket. So it's more like a profiling. It's not a function of inflow and outflow in your account. Why the taxman has declared inflow and outflow in the tax law is basically so that they can now say, oh, this person is doing this kind of transaction, they should pay tax. It's just to trigger a tax investigation, not because they want to use your bank account to rate you, right? It is solely unfair because people, even without even telling them it's business money, you can tell them that as a fine girl, as I dey waka pass me, the people they dash me money, and they can't contest it. So that's why I said there's really no standard to audit a personal account, right? That's why everybody online is trying to say you are selling me money, full gift, full gift, full gift, full gift, because they don't want to pay tax. But again, you don't audit a personal account. That is what I can tell you. So you should not be scared of the money that using your, or you should not be scared because you use your personal account for business last year.
Okay, I understand. Thank you.
Is that all?
Yes, that is all. But okay, I have an observation also. So because I'm registered as a company now, and of course I have a business account now, the prices that people are charging for financial auditing, it is not SME friendly at all. Do you?
What prices are they charging?
Of course, it is. I cannot say outrageous because, of course, everybody's charging their value. But because me, I know I'm a small business, but I'm just registered as a company. But these people don't want to see me as a small business. In as much as they are seeing limited, they are charging me the same thing that they are going to be charging Zenith Bank for auditing. And I'm just hoping there
No,
is
I
someone
won't
out
say
there.
that. I won't say that. Nobody will charge you on this any bank. Okay, so maybe what I can do, I don't know if I'm permitted. If Didi allow me, I can put my rates on the group later,
Okay.
and though you can compare and contrast. But most times, what I've been able to do is use the revenue threshold to set up a pricing system. At least you want to be able to price according to people's pockets. And most times, the revenue might determine the amount of work you have to do for that person.
I get it. No problem. I'll look forward to it. Thank you.
think that was Bisola Abi. Joy,
Good evening, everyone.
good evening.
Thank you, Mena, for the class. So my question is, I actually registered my business last year as a limited liability, even though it's a very small business. So,
No, I'm not everybody agree. Continue.
so now my question is, as a limited liability, we also have personal accounts that we are going to pay tax on. I am really confused about the personal income tax side, how to file, how to go about it and stuff like that. Is it the same tax ID we are using for company income tax that we are using for personal income tax, stuff like that?
Okay, no, it's not the same tax ID. Like I mentioned, there are different bodies and they have their own different tax ID. The Lagos State has their own tax ID. State FRS have their own tax ID. Even currently, said the tax ID NRS is giving people. Wait, please, a minute. Alpha, where are you? Okay, I'll call them. Hold on, please. This one. Sorry about that. I had a delivery. So, what am I saying? The personal income tax people have their own tax ID. The uh, company have their own tax ID. FRS have their tax ID. Meaning FRS have their tax ID. LRS, if you're in Lagos State, have their own tax ID. Even the NRS one that they released, they've not started using that one yet. I don't know why they released plenty tax ID. So it means that everybody say have like 4 tax ID right now. But that's by the way. So you have to go to state office to do this for your person. Again, like I just explained to the previous person, you are not going there with your bank statement. You are going there to tell them with your mouth how much you make, right? So your what is more important is even your negotiation skills when it comes to personal income tax. Then your state tax, obviously, if you say you're a small business, if you're a small business,
Yes.
meaning that you don't have anything to pay. If not, you
You
have
only
something to pay.
okay. So as a personal for personal income tax, we are going there to tell them like from our mouths how much we feel like we feel like.
Yes, so they'll give you like a form when you testify. You know the way you go to like testify that this is how much I make.
Okay, they are not taking your bank statements and stuff.
No, 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 no.
Okay, no problem. Thank you.
Please let me call my gate to deliver something.
For now, I think that he mutes himself. He's trying to pick up something. That's why you cannot hear. So we are just waiting for him to come back.
Okay, sorry about that. We can continue. Where was I?
Good evening.
Good evening. So who was speaking, please?
Good
I think
evening,
I my train of thought. Hello?
I think Joyce spoke. So I'm next.
Oh, okay.
Okay.
Jenny, right?
Yes, Jenny. Good
Okay.
evening, everyone. Thank you, Mena,
Good
for the.
evening.
So, my question is about for myself, right? I have a 9 to 5, and my company pays my income tax already. So, what does it hold for me as someone that now has a business on the side? Although I'm yet to do a business name registration or any registration at all, what is in it for me? I want to understand the steps to take as someone that already has some tax remittance in her name.
Also, which business do you have on this? Is it limited or
It's not
business?
just business name. That's what I'm looking at doing anyway, but I'm yet to do it.
Oh, okay. So, like I told, I think somebody asked this similar question before now. Honestly, what I would recommend is when you do your business name, right? The best, so the way it works, right, is why payee and PIT is the same calculation. Payee is monthly, PIT is annually. Now, if you are paying PIT, it's good that all your income tax come in form of PIT. If you are doing payee, it's good that all the your basic come on. So it's more like two lines of the same thing. If you do payee from your company and you go and do PIT as your business name, you might not be able to enjoy the full benefits. That's because it will be difficult for you to link both payments together. While you are paying to the same tax listing, it's just difficult for you to get your tax clearance where both income will reflect. I've done it I'm speaking from experience. Although they will tell you that do additional assessment and all of that, I will recommend that when you open your business name, right, because you want to pay tax, you can say maybe pay yourself like 200,000 naira monthly, so that you also file payee under your business name, also your payee coming from your company. So both of them, you are now under the payee, should I say, scheme, right? You just follow the payee and go. That is what I would recommend for you to do.
Sorry, so what if I decide not to do anyone for the business name? Will there be any consequences?
I doubt, honestly, because you already have a tax profile, meaning you're already paying tax. So the tax man is more focused on people that are not already paying than somebody that already has a profile. And again, especially since what's it called? Unless your business has significant inflow. But even if it does, it's the federal people that will probably disturb you for VAT and the rest. Right? State people might not really disturb you, especially since you're already paying tax. That is just the honest truth.
Okay, thank you very much.
Okay, I think the next person is
Okay, I'm
Ruth.
the one. Good evening, Ruth.
Yeah.
Yes. Good evening. Thank you so much for the class so far. And my question is kind of related to Jenny's question. So I'm in the process of registering my business, and I'm registering as a limited liability company. And it is more like two businesses in one. Like one, the limited liability company is now like an umbrella for the two businesses. Yes, so in such a situation, and I'm still doing 9 to 5. So in such a situation, how do I go about the tax payments and all?
Yeah, so in such situation, like I was telling them, right, they expect you to pay tax
Mm.
in that. So for especially you that is limited now, if in any way now, because you're limited, I don't know if you have a physical store. If the state
No,
will come to your okay, if your name pop up as a company, this thing, like I said, what's it called now? Companies, oh, personal income tax is an assessment. if your name come up, right, especially for someone like you that has a limited, they will probably see that, oh, you have shares in another company beside your paid employment. They will now ask you that, okay, what's the income from this company that you have? Are you not paying yourself? They might want you to at least be paying something off whatever it is that you're paying yourself from that. That is the only place it comes into play. I would honestly recommend that if you have extra source of income, no matter how little it is, find something for that source of income. It just saves you the stress of coming to do the best of while it is easy for you to hide under the pay you're already paying as a 9 to 5, just to be on the safe side, right? Because you don't want to be future when they right now you just say, men are say I should not pay, they will not see me. I'm not a tax man, right? These people they say if the bird learn how to fly without perching, the hunter will learn how to shoot without stopping, right? Uh, some of these taxes they might probably decide to switch them, but the best to be on the safe side, no matter how little, just be compliant, right? Personal income tax is not as strict as, especially since you can tell the story yourself. You can say, the business can only afford to pay me 200,000 naira, and you pay tax on 200,000 naira salary, which I think is fair, rather than say you will not pay at all. That is what I would strongly recommend. Not that you not pay at all because you already have a 9 to 5, right? That's why I'm recommending that instead of doing the annual one, do the monthly one so you can enjoy the full benefit of it. That is it reflecting in your tax clearance when you file your annual returns.
All
So
right.
that is all I can
Thank you
actually
so much.
recommend. I will not say don't pay at all because you're already paying 95. I will recommend that you pay so that in the future they see say, oh, you also get company. They will not see you're not paying that one.
Okay. Thank you. Thank you.
Okay, I think the
Good
next
evening.
person is Vela, right?
It's me, Esther.
Okay, Esther first, sorry. Good
Yeah,
evening.
yes.
We
Good
never
evening.
pass Esther
Thank
since.
you so much. Ah,
Okay.
it's the second Esther. Oh.
Okay.
Yeah. So I wanted to ask that in a situation whereby I've not registered my business and I've
Okay.
been receiving payments from my business into my personal account, where would I remit the or where would I file my taxes from? Number one. Then number two, would it have a downside later in the future? From the first one, like where would I file my taxes from? If I tell them that, okay, let's assume my personal account, I'm using it to collect salary, using it to collect business payments, and I'm telling the tax man that, oh, what I earn in a year is 1.2 million naira, but my account carries much more than that. Would it have a downside to that also? And would I also remit these taxes under personal income tax also? That's what I would. No, thank you.
Okay, so for your first question, where will you pay your taxes from? Honestly, right, the corporate account, while taxes has not quote and unquote to do with your bank account, for corporate accounts, the corporate bank account acts as a control measure. So most times that is the only tool the taxman has to compare with whatever it is that you're reporting, right? Because I mean that is the only
Okay.
verifiable information they can have. Which means that if you were receiving payments in your personal account and you choose not to disclose those payments, right?
Okay.
It means that there's
Yeah.
no way for them to verify if you made those money or not. So OT law, for lack of a better word, you technically will not file taxes, all of those. So you're a very good candidate to say, you just commenced business this year, especially if you didn't have a bank account or you were using your personal bank account, right? Before now, people do that
Okay.
to reduce their revenue and file lesser taxes. Now, but one
Yeah.
thing, so they know all of this, and that's why they have said, uh, as an individual, you should not be doing, if you the moment you do more than 25 million naira, they will flag you for investigation. So they are trying to discourage people from using personal account for business purposes, right? Because if you are not doing that kind of every transaction, it's then that you now begin to explain what is going on in your account, which
Okay.
if you're doing such transaction, you obviously want to do it in your business because doing business transactions in your personal account is just another word for you are trying to evade tax, which is then a crime, because why use your personal account for business purposes? So that is what I can say to that. Right. Again, I think I've forgotten the second question.
Okay, I was saying that is there any downside to it, and you already answered that. If they eventually know, then
Yes,
I've
no.
committed a crime already. Yes, but also when I want to try to, eventually register that, okay, I just started my business, won't they ask me for my CAC document and then see the year that I registered my business? Maybe
Now,
I
since they run
registered
the
like,
business,
what did you say?
I since they run the business, even me as I'm speaking, I have like 3 businesses that I've opened. I've never ever done anything because the plans I was having,
Oh,
they flopped. So it's a normal thing. You're not the only person to have registered a business and did nothing.
okay, all right. Thank you
So that
very
should not even
much.
be okay.
Yeah, thank you.
Please, let's be asking fresh questions. Fresh questions. We're asking the same
Hi, good
thing.
evening, Viela
Good evening, Vela.
here.
Hope that fresh questions for us. Hello? Vela, hope you have fresh questions for us.
Hello, good
Hello?
evening.
Good evening. I say hope you have fresh questions for us so we can hear you.
Yes, please.
Okay, let's go.
So, my question is regarding, can you hear me?
Loud and clear.
Yes, please. Yes, yes, yes. Can you hear me?
You are the one breaking, oh.
Hello, can you hear me, Mr.
I can
Man?
hear you loud and clear.
Yes, I do. And I've been in University for some years now. Can you hear me now? Let me move. Okay. So I
I
was
think
saying
that the one
my
not
question
hearing
is
me.
regarding
Can
location.
other people hear me,
There's a
please? I
penalty
don't
from one
know.
of your slides. I saw that there's a penalty if you do not state. I can hear you. I can hear you very well.
Okay. You not state what?
I'm asking regarding location. If I registered my business name in Bayelsa State, but I am currently running the business in Rivers State. And from your slides, there is supposed to be a penalty if you do not state that you change location of your business. So
Yes.
now that I am supposed to file for my taxes, where would I file? Which state will I file? Bayelsa State or Rivers State?
Okay, so first of all, those that what's it called? That's like mostly concerns federal, right? Uh, from experience, from practicing, only federal people actually enforce penalties. For most times, the state they really don't. You know, individual team they never fit pay the tax and call penalty. So it's easier to enforce it on a business than to enforce it on individuals. That's one. Now, since you asked, that particular one that you asked is actually for companies. It's companies that change address, change it, and you have to update this thing. For states, you basically pay to your state of residence at that time. And if River State is your current state of residence, then you are paying to River State. And that's one of the reasons why they've tried to unify the whole system by creating new tax IDs, federal, or should I say new individual IDs, so that wherever you pay, at least it will reflect to your account that you've paid your personal income tax. I've been
Okay.
sure about Nigeria. So, but at the moment, you pay to River State.
Okay. Okay. Understood. Then my second question is about the VAT, output and input VAT. Now, when we are doing all these bank transactions, some of these transactions have VAT on them. Are we deducting these VAT from our output VAT before we make payments? I don't know if I'm putting the question
Yes, you are putting
correctly.
it. If you
Can you
have a
hear me?
schedule of those VAT transactions, by
Okay.
all means you can. Hello?
Okay.
Yeah,
Okay.
that's what the
All
law permits now.
right.
You
Thank
can take, you can claim
you
it. So
very much.
you have a steady
Yes, I
operation.
heard you.
So is that all the questions we have? Didi, I think those are the questions. So do you have anything for us? It's almost 10, sir. That's about 2 hours
Yes,
now.
my
All right, no
last
problem. Thank you
question.
very much.
So you said that for the personal income tax, they're not going to ask you for your statement or anything. Does the same thing apply for the company
No,
income
company,
tax?
they will ask you for your kidney, sir.
How? Oh,
You will present your bank statement. So when you are filing, you don't present bank statement. You present, so you file with a financial report, audited financial report. So after filing, right, they now do what they call a desk review, which means they will review what you have filed. So during the desk review, they will not ask you for your bank statement and supporting documents for whatever it is that you filed. So in the filing process, you don't present a bank account, but it is safe to say you present a bank account because you still have to do it during the desk review. Are we good?
yes. One last question, because it's
Go
almost time.
ahead.
One last question. So I have lots of business names, but I recently registered one as a limited liability. Although I have not, like I just got the document very recently. I have not officially moved my bank to limited liability. Do you suggest that I move it to the limited liability and close the business name for that particular business? Because I have multiple businesses before filing, or you suggest that I just file before I move, or I just leave it like that?
So if you moved it, you might as well close the business name and start operating. Like I mentioned, your bank account, right, is supposed to reflect what you're filing for. So you cannot be using a business name bank account to be filing returns of a limited. It just does not make sense. Why they might not agree to you, it just you will not be enjoying the full benefits of it, right? And you open the limited liability for a reason. So you might as well get a limited liability bank account and enjoy the business. So ideally, you cannot be using the business name, even if they want to write you for compliance, they will not be writing the business name bank account, right? They will treat the business name as the business name, they will treat the limited as the limited. So to enjoy the full benefit of the limited, but while you opened it, you might want to get limited bank account.
All right. So that means that if I get a limited bank account, I might actually escape paying taxes for the business name.
Yes, because you not be doing transactions there again now. That
Yeah,
one
yeah,
has
yeah.
closed. Yeah.
And I think that's like a good option for me and my friends that have plenty businesses like that.
Why are you opening plenty businesses?
Ah, you will open now that this particular business. So then after like 2 or 3 months, you just abandon the whole thing.
Oh, okay.
Yes, but
Okay,
there's
I was
always
thinking
like
you're opening the threshold.
there's always like the main one that passes the threshold.
I you have the assistant.
No worries, Sha. We'll talk. We'll talk in.
Okay, no problem.
Yes. So for anybody that needs these services, because this is a lot of mathematics, so especially if I don't know if I should even be calling myself a small business owner anymore. It's a lot of mathematics. So if you need him, I think, and he also offers very minimal amounts depending on what you need him for. The other lady that said the other time that if you're blah blah blah, there's a threshold. He's also working with a threshold to audit for you and do all of that. So even if you are registered as a limited liability, and let's say that your whole threshold is 10 million naira, he's going to charge you based on that, not just because you are registered as a limited liability.
Thank you, Mama.
So I've been like, that's not how it works. That's how it
That's
works.
how it works. That's how it works.
All right.
You too much.
Thank
Okay.
you. Thank you. Thank you
Thank
very
you.
much.
Our video recording will not be too long.
All right.
Uh,